morning, everyone, and welcome to the European crossover webinar. We've seen the euro dollar come right into support, and this was the area that I was looking for, which is the 1335, which looks like we just hit that to the pip and maybe just took that out by 1 or 2 pips, I guess I should say. So we can go and take a look at what we got coming in on the docket for economic reports coming into the U.S. session. We did have some Eurozone inflation. I'm not thinking that's necessarily impacting the market. And we'll get into that, not so much that, but how the market changes. So we do have Canadian manufacturing sales, industrial production, U.S. industrial production. We also have the JOLTS job opening, as well as Michigan consumer confidence. Michigan consumer confidence, Reuters poll is 89. Power was 85.70. Well done, Capital Economics, who called this, and a lot of people were surprised by the fall. But we talked about here, and I certainly wasn't, because I was looking at that from Capital Economics. JOLTS job openings, they're looking for 5.63. So let's go on and get into the euro dollar. And I thought that this was important. I had actually tweeted this out yesterday, and I just left this here. And I think this is a good microcosm of sometimes how a market can go into trade. You know, we had this big old run up here, and there was all kinds of reasons, primarily just because a lot of bears got on the wrong side of the market, and then we squeezed up higher. And not only on the wrong side of the market, but because the idea that, you know, the Fed wasn't going to be able to raise rates, and that allowed the dollar to go on and pull back. And so we saw that move, and then it went further higher, basically because we had a lot of bears that were getting squeezed here. You can see sometimes you have to be careful and look within the context of how the market's trading, because you have some areas that people that may have just gone right on simply just candlesticks would have got fooled. Especially right here when we came to the 14 area, and then you got this what appeared to be a shooting star, but the wick's really not long enough for shooting star. And then you got this doji, and you would have, some people probably would have thought we really would have fallen off. And that just wasn't going to be the case, because remember we talked about it earlier in the week. We had not seen any economic data, or U.S. economic data being released that was going to be key yet, and was already on the docket. So then we came up here, and then this one looked also to be hanging man. But we got to our 1455 or close to it. We hadn't quite got there. So I was looking for them to just still push a little bit higher into this area. And you know, obviously we got that later in the day, and then we got here, made this run up in here, and I was you know, stating that I was, at that point I wasn't going to wait for the end of the day. I was going to short it right there, which was 1475. We did go a little bit higher in Asia and got up to this 1494, but I thought that the market was overdone, and my point was, you know, I'll take that trade, and if it gets up to 1550, which I didn't think so, but I thought they could always maybe make it up to 15, like here, 1520, or a little bit higher. I thought I can live with that because I've done, well down here. I'll be able to handle this up here. Overall, from a risk reward standpoint, because I thought it was just exceptionally overdone. So I'm going to get to here, because obviously there was a lot of stuff going on here that we had not had any tier 1 US. We actually had no data, no US data to speak of, really, had been released on this move. So, and the idea, the thought was that data was going to just reinforce the thoughts of a weaker dollar. So we needed to wait for that and see how much they push that. And we just hadn't pulled back to get anybody out of the market. So it made sense that they would go on and push higher. But I just thought that we were really overextended in this area. On the way down, we finally got it to go on and break. And I mentioned that a 2-hour close below 1413 would then target a move to the 1330s. And we just saw that. But on the way down yesterday, this was the area for the Monday highs, 1392. You see, this is a Monday high right here. Right there, that's the Monday high. You can see how that just took that out. I think the high was like maybe 1394 or something like that, okay? So on the way down, when everything was coming undone, I thought, well, they're going to slow down at 1392, okay? Because this was the old high. But once again, I guess because so many people have gotten squeezed here, there wasn't enough to hold the market up. So it slid right through 1392 quickly. And as it started to slide through 1392, they're going to go to the next main level. And I'm going to tell you how this works. Is that generally what will happen is, I'll give you an example. At least the way I trade it. Let's say that I was flat, or I'd already covered my shorts. So I'm thinking, oh, this is going to be a great area to step in and pick up the market, because they're probably going to go on and bounce off of this. So I go on and step in at 1393, 1394, maybe at 1392, and the market just goes right by me. Well, what I do is I'm not going to panic at that point. I'm thinking, okay, well, how much further are they going to go on and go? Here we are, we're blowing right through it, 82, 81, 78. And so I'll look at, obviously I'll also look at the 30-minute chart, but I'll look here and say, where are they going to go to? And I'll say, oh, okay, they might make it down to this 1365. So I might pick up a little bit more, like let's say it's 74 or 73. And then as we dip lower, and I'm thinking, uh-oh, well, I guess they're going to make it down to this 1365. I'll pick up the 1365, or right there, maybe 1367. But it really wasn't, what I'm trying to show is this really isn't about scalping the market as much as what I was trying to say is the market was doing its own thing up here, and you couldn't stop it from coming down, from going up. No matter what, it was just a slow grind up here as it made shorts puke. Now on the way down, if you're thinking, man, I'm buying this thing is going to turn around, it's going to Venus. I'm telling you, it's going to Venus. It's going to 118, 119, 120. I'm picking it up. And then, so you're picking it up on the way down here. Let's say you're picking it up at 1413, and it's just going, slicing through a knife through butter through 14, 1392, 1380, and you're thinking, what the F? This is BS. This market wouldn't even pull back 15 pips, and now it's just sliding through there like as if it's come down a waterfall. And so then someone ends up ultimately bailing out, and then all of a sudden you see the market coming right back, and they're like all pissed off, because if they would have hung on, they would have either made a little bit of money or they would have been flat. Instead, they took a big fall, and they're thinking and I've seen people, they don't know how to trade. I saw one guy, he spent a lot of time on it, saying the FX markets are rigged. You know what, dude? You just don't know how to trade. That's simply it. You don't know how to trade, okay? Or you don't know how to trade FX. That's just the way these markets will go on and trade. And so it is frustrating if you've been short and you watch this market grind higher, and you just can't take it anymore, and you finally capitulate or give up. Not only capitulate like the market capitulating, but the person, an individual person, just finally giving up and throwing in the towel. And then this person gets ticked off and says, you know, this market has screwed me. I'm going to go on and buy it. I'm getting my money back. And so he buys it down here and says, I don't care. It's going higher. I don't care. And then it just keeps going lower, and he panics and he jumps out. And now he sees the market come all the way right back up here, is all ticked off, and feels like the market took advantage of him. Well, what happens is the market just simply changed from this grinding mode, and I mean, it seems pretty obvious now. What I'm saying is, you know, this market wouldn't even give back at all. But it was because we were already in the dollar pullback mode, because everybody's thinking, okay, the dollar is a sell here. And it's not so much to me, I don't think it's sell as much as it was just going to go on and have to step back and slide further before we came into support. That's why they were going to push them higher, and that's why I argued on Friday, don't short this market. And so it had to go on and run its course, and then we got overdone because there's no reason for the euro dollar to be at 115. So we got the pullback, but don't forget, the key thing is what was being held under the stool. So I'll give you an example or analogy. So the person who's thinking of buying out, he thinks the stool or the chair is rock solid. And what he doesn't realize, remember, this whole move that went beyond up here was basically on the back of all the shorts, okay? They were puking in there. So you can think of the chair, really the stool, the legs have been basically eaten by termites. So when we come down here, the market just basically collapses. The stool collapses and falls down here. But what I was trying to see, what I was trying to indicate with this is a microcosm, is that when we came down here to the 1365, we find support, and where do we rally back to? 1392, the Monday highs. And then the market pulls back and finishes about almost in the middle of the range. Now this is a 2-hour bar. It's not like as if it's a 15-minute bar, but it's interesting because, like I said, they came down to 1365 and then they rallied and went back to the Monday highs, which would have been on the way down, should have been support, now becomes resistance as they blew through it. Then eventually we did go on and make a run up here towards this broken trend line. Now, if you throw a fib on it, look where they run out of gas. That's what I'm saying. You have to trade it in an entirety as a package. Look at this right here at the 38%. And that's what I'm saying is you can make this FX trading as hard as you want, and I wouldn't necessarily say as easy as you want, but I'll give you an example. That's why I don't use any oscillators, no RSI, no stochastics, no MAC. That's all. I'm not going to say it's bullshit, but I'm saying is I don't need it for the way I trade. For the way I trade, I use levels, Fibonacci, and one thing that is tough and takes experience, I use price structure, the structure of a market. And the structure of a market is what I was trying to explain to y'all earlier this week, that the market had done a crap load of work here versus, let's say in here. So when the market broke down, it was able to fall apart. Or even here, we did rally, but then the rally fizzled and ran out of gas. We did find support, we rallied. The amount of work that we did here was so huge that when it did break out, it was going to go extended because there were going to be people that were on the wrong side of the market. And I, for one, was a bear. But I kept telling y'all, and that's another thing of understanding price structure along with how the market's trading. I said that on the idea that the market could come back on Friday after the FOMC minute release and get back past the 1283, past the NFP highs, was going to be extremely bullish. So once again, like I mentioned the other day, I think it was Tuesday, what I'm trying to show you is, what I'm showing you right now is far more important than to say, okay, you can buy here, this is the 78%, and it's going to go here, we think it's going to go here, and it's going to pull back, and you're trying to figure out, okay, well, give me the levels, dude. I'm trying to figure out and put on a trade today. What I'm trying to show you is what's more important is so that you'll be able to go in and trade yourself and figure it out yourself and make your own assessments. I mean, like I said, everybody has their own different ways. There might be people in this webinar that use RSI and say, well, I don't care. I use RSI and it told me this. I mean, I've used everything in the book. I've been trading for years and years and years and years. I've used everything in the toolbox. Everything in the toolbox, and I've adjusted the toolbox. I've adjusted the tools. I've adjusted the thing to fast stochastics, slow stochastics, fast RSI, normal RSI, using a combination of the RSI, all that crap. I'm just telling you the way, what works for me consistently in Eurodollar is to trade the levels, use Fibonacci as a confluence, and then the extra thing, which is huge, which is tough for a lot of people, it takes a long time to learn, is price structure. Now, some people may look at this here and say, this looks like a head and shoulders. You can go and see that here. I don't know, because to me, you know, there has to be a catalyst to go on and do that. Doesn't mean it can't. I just think it's a little bit quick for the dollar to go on and hurry up and find a lot of support. I don't think the dollar's out of the woods yet. So I would expect the euro to rebound potentially back here at 13.92. And someone had asked me, do you think this is part of a bigger move to 118? Honestly, I don't think so, but you know what? I'm out of the prognostication business. One of the things that you will find is for those people that say, and because I've been on that in that situation, is when you make, I don't want to say guesses or whatever, but thoughts of you saying it's going to go to 120 or it's going to go to 106. I'm telling you right now, it's going to 106. When what ultimately happens is you vest so much into that thinking is that you become blind to everything else, and then you try and justify trades where, okay, it's running out of gas. You see, now it's going to make its move to 106 or whatever down here, and it's better just to have more of an open mind. I always say that the best way to be a trader in the FX world is to be, you know, I'm trying to think of the right, I can't think of the word right now, but, you know, sometimes they call them soldier of fortune or whatever, but, you know, where you're just basically a paid soldier in the sense that you're going to go on and go with the side that pays you more money. And that's really the way you want to go on and trade FX. I mean, we all have our biases, but I'm saying is that's the way you want to go on and trade it. Who's going to give me the most money? Now, I mean, I say a whole bunch of stuff up here, and sometimes I talk smack about, you know, there's no way, and you see, I told you it wasn't going to get to 116, 118, but that's all for fun, and sometimes I'll chide the bulls that get really carried away with themselves. But once again, this is what saved me here on this trade is I didn't get so wrapped up in it from Friday, essentially to go and say, oh, okay, now I don't care, it's going lower. I respected the idea that we defended the 1283, we got past the NFP highs, and then we were moving higher up here. And the way that the market was positioned from a price structure standpoint, that it could move far higher. And I think that that's far more important. I do think this 35, this is what I was talking about. I said that you know, I was short already up here from 1475, but I said a break of 1412, which would also, you know, that was going to confluence and not confluence, but it's going to also be taking out this area here. It's basically going to be like a double whammy. Would target a move to the 1330s. think I said like 1330, but 1335 support. So you have to go with where there's support. So I'm flat. I don't have anything on the market now. So we're going to take a look here into the gold market because I got short the gold market yesterday. We looked at it yesterday and we talked about this 1190, but what I was looking at here was also this 1191.90, and I posted that out, and I'll show you where I got that. It was a fantastic short. It was just a fantastic short. That was right in here. I covered way too soon. I covered on the way down. Well, I hadn't traded gold in a long. I haven't traded gold. I've talked about it and said this is the support, the resistance. I haven't traded gold since this whole area here, all the way down here, backwards and forwards. Actually, in here, all this move up in here. You know, remember all the way up to 1307 and all this move. We were trading pretty active. And you remember the move back up here. I think this is when Yellen spoke in front of Humphrey Hawkins, and we dipped down. Remember, we dipped down to 1191, and then we had that rally back up. All this area. Once we got past here, I didn't do any more in gold. So it's been a long time since I've really done anything with the gold market. I did do a little bit in here. That's right. I did do here. I remember this, but it was just super small in the sense that I wasn't active. Here, I was active like a mother. This whole area back in here on the way up, and remember this is in the Greek fiasco, and I was like saying, hey, gold's not responding to this bad Greek news, and if it did respond, it would only respond half-heartedly, and then we chased it all the way down, but we did really well. So I haven't done anything with crude, I mean gold. But this was pretty unbelievable the way it came apart so fast. I didn't expect that. I did say that you could go in and get long. You could engage longs at 73.5. I thought that was more prudent at that point to engage longs at 73.5. So not bad. The low is 73.80. And we did have a nice rally back. But I'll be looking to trade gold more actively. Basically, already set it up on my charts to look at it on a 30-minute basis and also on a 10-minute basis. But it's been a while. Like I said, I didn't even pay attention. Once it got down here, I was like kicking myself. Like, well, not really, but I'm thinking, man, I jumped out. But I'll tell you what, that was a fast $7. That was a fast freaking $7. But it went lower than that. It went a whole lot lower than that. So, but I don't see anything right now with gold right now at the moment. But I will be following it fairly closely to get a better idea. And I guess with gold, you kind of have to just wait for, just like any market, but I think maybe more so with gold, at least at this point, you have to wait for those good setups. Here's a good one right here. This is called a spinning top. It's a little bit too long for a spinning top. The body would delay, the wick would need to be a lot shorter. But if you look at this run here, that's pretty good right there. You had a nice little pullback. Not huge. It took a little while to develop, but still not bad at all. This may have fooled a lot of people right here who may have thought this was a graveyard doji. But the problem is the graveyard doji is not near the top. It's after the market's already pulled back. And maybe some people got short, and then that's where they got stung on this run up to 1190. Above, I should say, above 1190. So let's take a look here at the dollar yen. we talked about this yesterday, and yesterday I tweeted this out, that we had supported here this 1805. Now, if you remember, I was looking for the market to go on and defend the 1882, which it did initially. We had a hammer bottom. We rallied about 35 plus pips. Now look, this is a graveyard doji. It's a little bit long, but you see now after a rally, this is where I said that this is really kind of suspect now. When we got this graveyard doji, then the market rolled over and got past my 1882. But on the way down, I tweeted this out. 1822 is a 61% of 1603 to 2176. We covered this yesterday quite a bit, remember here? And I cautioned, and I literally use the word caution. I go, I'm cautioning shorts. I go, this 1805 is a very good area. Right here. I go, I would not be chasing these shorts here. And I was saying is the whole thinking is that the Bank of Japan is still going to go and do quantitative easing. I question how the market is going to react to that ultimately. But you got to know that that's what they're going to be looking for, and they're going to defend these moves down here, and we've seen a move well over 100 pips. That's why you have to have your levels up here. I like to mark these levels up because I already know what I'm looking for. And when you look at the last bar here, right here, there's nothing to indicate where 1805 is coming from. But I had that 1805 from way, way, way back here. Way down here. That's why I like to go in and mark these off. And also I looked at the overall market, in this case from a fundamental standpoint, and not fundamentals the way you think of it, as Japanese economic fundamentals. No, fundamentally speaking, thinking is, wait a minute, there's still going to be the likelihood, very increased likelihood, I believe, for additional quantitative easing coming from the Bank of Japan. You have to be wary when the market comes this low, because people are going to step in. Now, technically, it looked terrible, but you see, it went right past it, and blew right past that 1883. So it's already time for a break, so I'm going to catch a break here. Basically, just wrapping up things for the week, for the most part. I'm flat across the board. That's what I thought today was more about, just kind of getting an idea how these markets are moving, and take a look at it from that perspective, as opposed to like this. And I think that that's more important, that from a learning perspective, as opposed to just trying to say this level, that level. Especially since we've already had, like even with the dollar yen, we've had a very nice pullback. What are you going to say now? You know, sell it here, buy it 15 pips later? No. It's just like I said, we'll go on and take a look at some other pairs, but you know, hopefully most of you had a good week. Let's kick back and just, you know, get ready for next week. But we'll look at the other pairs, and we'll catch you about 7 minutes.